Okay, we're talking about blowouts here, and we're talking about the terminal price bar. Now, what happens is that we're looking at a bearish harmonic zone, and we get this extreme expansion that goes through that area. And sometimes it'll be a tail close at the high for a bearish situation, but for harmonic trading, we don't really care. We just want to look at that price action that happens immediately after the terminal price bar is established. So that big candlestick that tested all the numbers in the zone is the terminal price bar. But what happens immediately after that is you get that clear continuation. And there's no reversal, there's no stalling, it just continues higher in a pattern of higher highs, and especially higher lows. And when you see that, and you don't see any stalling, like if we're looking at the three blue lines, the price action doesn't stall in this area or just above it, it goes right through. That's a clear warning sign of that it's an extreme terminal price bar close through the potential reversal zone with bullish continuation. So if you don't see this stalling and the change in character in the numbers or just beyond the numbers, especially after all the numbers are tested, then and continues higher, like within one or two price bars, you step aside because there was no execution to begin with. Because remember, we don't take action until the end. No, it's unless it's a type 2 breakout, unless we're at a type 2 reversal. Remember that first reversal, the type 1 reversal, is that a natural reaction that's like 85% correct. And that's, but we need to do automatic profit targets and need to know where to cover those trades. But for this larger concept of how to play those breakouts of failed patterns, has to be a type 2 reversal, and it has to yes, you could take advantage of that, but if you were to buy that, it would have to be after the terminal price bar is established, and it would have to immediately continue higher up to, for example, when we were looking at that Gartley that failed, you know, you want price targets at the 113, 127, and hope you catch a third at the 1618. So that's, you know, just know that has to be an active trade management strategy too. So yeah, so don't take any action, and I would give that a little time as well, because what happens in those situations is they especially if you trade in specific markets, they're going to have certain characters of, in my opinion, with certain patterns that repeat too, where let's say if you have a butterfly and you see 4 of the last 5 times that butterfly overshot the zone, the 5 out of 6 is probably going to overshoot the zone. So, you know, that's just notice that type of variation, but you got to respect those warning signs.